It's funny, he's been doing this for under 2 years and just absolutely skyrocketed the way that he scales it with a partner. And I mean, he's very matter of fact, and he gave us strategies with.
The crazy thing is everyone feels like, oh my gosh, this is ridiculous. And at the end of the day, I'm like, we did a very, very simple structure 2 times.
I feel like that you can just read in books. It's like, it's the art of negotiation, and then like creative financing in itself, right? Some people don't even understand how a seller financing deal works.
The easiest way to be an investor is to go buy an investment. Turns out that instantly qualifies you as an investor.
So even somebody that's a high income earner like a lawyer, we've heard a lot of these stories where people say the same thing, like, wait, I got to be on the other side.
We have a equation that is simple to follow. It's deal equals debt plus equity. Like, you have your deal first, then you can figure out the debt and equity. Deal always comes first.
Can you just give us like the ins and outs of this whole deal and how you got it up to like brand spanking new, or to where you're making, what'd you say, 20 grand a month cash flow?
Little stuff, not that expensive, but people saw that we cared. And all of a sudden another wave of requests came in and we solved all those.
And getting that thing started, and then who knows when it could come back around to you, and it may never, but that person may introduce you to somebody else.
Welcome back to the Weekly Juice. As always, it's your boys here with another episode. Ryan and Corey here. Today we had on special guest Christian Osgood. He is a seasoned multifamily real estate investor with over 70 units in Washington State. He has a few more under contract now, so he's going to be just about 92 units probably when this episode comes out.
Yeah.
And he basically specializes in seller financing and using creative funding strategies to build his portfolio and invest in real estate. He's only been going at this thing for a year and a half and already has a huge portfolio. He talked us through one of his deals that has 38 units and just walked us through the ins and outs of it and how he got it under contract, who handles what in the deal. And it's just amazing to see what people can do when they put their mind to it. And I mean, to not put any money of his own down in these deals is insane.
Yeah, he essentially seller financed the entire deal, the entire $2 million. And then he financed the down payment through people that he met. So he's a true relationship guy. And we said seasoned investor. It's funny, he's been doing this for under 2 years and just absolutely skyrocketed the way that he scales it with a partner. And I mean, he's very matter of fact, and he gave us strategies within the episode of exactly what to say on the phone, how to say it, and how to build relationships with not many people. Not many people have done that on our show. So he's essentially giving people the formula in our show to say, this is how I built a portfolio of 90 units in a year and a half, and you really can too. And I thought that was really refreshing to hear.
Yeah, very powerful episode and a good how-to guide on certain things. So
sure.
I guess without further ado, let's bring in Christian to tell you how it's done. Well, Christian, officially welcome to the Weekly Juice podcast. Corey and I are excited, to say the least, to have you on the show. So we're very excited to share your story with our listeners and get to know you a bit. So thanks again for coming on the show.
Absolutely, man. Happy to be here.
Cool. So if you could give us a little brief background on yourself, who you are, where you're from, and then the story of how you got into real estate investing and how it changed your life.
All right. Well, who I am, I'm Christian. I'm from just outside of Seattle, Washington, born and raised here. Tired of being here. I'd rather be from Texas, but for right now, from Seattle, Washington, been here the last 30 years. I wanted to be an investor like 7 years before I actually invested. And that's probably something we're going to dive into today. The easiest way to be an investor is to go buy an investment. Turns out that instantly qualifies you as an investor.
Right.
It took me 7 years to figure that out, but I had a 7-year sales career trying to learn, hey, how do I earn enough to buy a property? And then once I bought a property, I was like, well, now I'm out of money again. Now I have a little bit of cash flow, but I either have to go back and earn my way back to my next property, or I need to figure out another way to play that. And that's where it started to pivot to me of being an investor meant getting creative. And whether you have, hundreds of thousands of dollars or you have $0, how do you play the game no to low money down? And that's what I had to learn. Wish I learned it 7 years earlier. My business partner, Cody's 22, doing 8 years younger than me, doing the same thing, 10 units ahead of me. However, that's me in a nutshell. 7-year sales career, dove into real estate a year and a half ago, and here I am today.
Did you say a year and a half ago?
Yeah. So I was real estate industry. I worked for CoStar Group. for 4 years prior to buying a property. So CoStar, they owned LoopNet, apartments.com, basically the internet for real estate. They bought it. They're a behemoth. Worked for them for a while, wanted to be an investor, but finally pulled the trigger December 2020. When the pandemic hit, I am not a work from home sort of person. So I was working, I didn't see any humans, and I was like, this sucks. I'm pulling the trigger and buying real estate. I bought my first duplex right there.
Love it, man. So first of all, what about real estate though? I mean, you're in sales, so you're like, we're in sales too. So we kind of maybe come from the same cloth or around the same age. And we're like, you know, I mean, I enjoy making money. Like I try, like it fuels me to go out there and try to sell and try to like progress. I really like progress. But I'm curious, what about real estate? Because there's a big difference to being in a sales career. Maybe not a huge difference, but there's a difference between being in a sales career and then being a real estate investor. Like, what was something that piqued your interest about real estate to make you even decide to go into it?
Well, the first thing about real estate is infinitely scalable. You can't buy all the real estate out there. Just period. Impossible. Biggest asset class there is. Very competitive. And at the end of the day, for me, I was selling to owners, brokers, banks. And you get behind these owners and you're sitting across the table from people, and some of them started from nothing. I mean, I know guys who they immigrated to the US at 17, $900 in their pocket, no English. And they have over 2,000 units owned in cash, no debt.
Wow.
Hundreds of millions of dollars. And they did it through real estate. So I'm sitting on the other side of the table from these people, and it took me way too long, but I finally realized I'm on the wrong side of the table. And for me, that was the jumping off point for real estate. I was like, I need to swap sides here.
You know, it's really funny you say that. We had an investor on, kind of become a friend of ours, a lawyer back, like way back when we started the podcast. And he said the same thing. He's like, and when you're a lawyer or trying to become a lawyer or whatever, like the anticipation of you're going to make a good amount of money. But he was talking about how he's like, he was making $700 or $1,000 per transaction when he would essentially close the deal. Like, you know, lawyers can serve as real estate agents in the closing of a deal. And then he said the same thing. He's like, wait, these investors are making passive income every single month, and I just made a one-time thing and I got to show up and do it again in order to make more money. So even somebody that's a high income earner like a lawyer, we've heard a lot of these stories where people say the same thing, like, wait, I got to be on the other side. So I think that's interesting. Neither of us work our day jobs in real estate, so we didn't have that exact experience, but it's just funny.
It's cool. And well, I want to talk about too and maybe you can give us the story. I know you said you started with a duplex, so I want to start there, but then can you walk us through how to you got up to 70 units now, I think you're at, in just a year and a half?
Yeah. Well, that was when I filmed the podcast. Since then, I'm up to 79, under contract for another 16. That's just a rhythm both Cody and I like to have. We were partnered on almost all of those. It's 50-50 on a vast majority of the portfolio. But every month I like to be under contract for something. As soon as we close something, I'm like, man, this is kind of weird. Like, we're not working on anything. So we get another one going. So I'll be end of next month, I'll be at 95. Today I'm at 79. But that's where I'm at today.
Yeah, let's talk about maybe the beginning phases of this, because when I were to hear, okay, someone's at 95 units or going to be at 95 units, I'm thinking, man, you must have been in this game for 15 years, or, you know, at the normal pace that it would take I don't know. I don't mean to not call you normal, but you're doing this pretty quick. Like, there's something to it here. So how do you attribute, first of all, like the way that you scaled, and then maybe if you could take us through some of those stages of getting from 0 to 10, or, you know, whatever, the pace that you were able to move at?
Yeah. Well, that's the thing. Cody and I, to my knowledge, we're the fastest, youngest people doing the creative finance. There's some people who've done amazing in it. I don't think anyone's ever gone quite as fast. And so the way we scale is all about setting the right targets. For me, originally, I wanted to retire myself and retire my wife. And the best I could tell, that took about, in a partnership, it took about 50 units. Half of that's 25 units. And I was like, okay, that should just about do it. I want to get to that 15, 20,000 a month passive income. I started with a duplex, and then my second purchase, wait for it, was another duplex. I was like, okay, I'm comfortable here. I know how to do this. I went to a new market, and the guy who owned the sixplex across the street just happened to be Cody, who also happened to work at the same firm I did. He told me to buy the duplex. It was a hunk of junk, and he showed me the upside on it. And I was like, I love it. Let's go. Bought that second duplex, and I hit a realization. I wanted to, another goal I had is I want to hit 30 units by 30. The problem is I was halfway through 29. I was like, oh, it seems unlikely that I'm going to buy 13 more duplexes, right? I brought the problem to Cody, and Cody is the one who introduced me to keeping everything simple. He's like, you want to hit 30 units? He's like, there's been this 38 plex has been on market for 13 years. I know exactly how to take this thing down, but I need a partner to do it. And I'm like, well, 38 plus 4, that's 42. That's more than 30 units by 30. That seems like a really simple solution. Let's do it. And that was the deal that opened my eyes to. It was just as easy to buy 38 units as it was to buy 2.
Christian, did you say that this property was on the market for 13 years?
Yes. Cody was 8 years old when it was first listed at the same price, $2 million. It was a lot of problems with it. It was very poorly managed. It had some septic issues. And by some, I mean a lot. There's a homeless camp on the property. Super fun. If you have no idea how to deal with homeless camps, neither do I. I lucked out, and right after we closed, our neighbors started developing and cleared them for us. But it wasn't conventionally financeable. And so if you were a conventional buyer, you had to buy it in cash, or you had to come up with some fund to go purchase the property. What no one did was go out and build a relationship with that owner. And Cody was already working on that a little bit. The broker happened to be the niece of the owners. So instead of submitting an offer or a letter of intent or any of this other garbage that people do, we met and we said, what do they want to do? This has been on market for 13 years. You've never changed the price. It's been in and out of contract all the time. What do you want? And ultimately, they wanted $10,000 a month, passive income. And at the time, the property was bringing in 5.5, which was, they basically had no debt on a 38 plex and were still losing money on it. Total mess. But they just wanted to figure out how they can retire on $10,000 a month. With those terms, we were able to structure the deal seller financed. And we put together a plan where the payments start very low so that we can cover expenses, and they increase over time up to $10,000 a month in month 6, giving us time to improve the property, fix the problems, increase the rents. Super simple, nothing crazy, just this much relationship and a little bit of creativity, and got the deal done. And it is a stellar deal. Since we bought it for $2 million, we brought the income on it from, this was 7 months ago. We brought the income from $5,600 a month to over $20,000 a month.
Okay, this is amazing. And I'm going to explain, I mean, it's amazing. I don't have to explain why it's amazing because he just did. But one of the cool things is that a lot of people who get into real estate, and we're no, expert investors here, but when they get into real estate, they think this is all a numbers game. And let me explain what I mean. It is a numbers game, but more so than a numbers game, way more so. It's a people game, right? And you just proved that right there. It's like this owner, $2 million, you look at that number. If Ryan and I looked at that number, we'd be like, maybe after listening to you, we might not think this, but we'd be like, how do we afford this? How do we afford the number? But you're not thinking about the number as much as like, what does this person, this actual human being who's the owner actually want? The number is a number, but what do they want? And to get to $10,000 a month in passive income for this person, that's where the whole creative funding comes in. People throw around the words creative funding all the time. What is it? Like, it's like this, almost like this fictionary tale, but really what it is figuring out what the owner wants and figuring out how you can get there. So I just like, I love the perseverance on it. And you owned 2 duplexes, which is less property than Ryan and I own right now. And then your next deal was 38 units. So it's like anybody listening to the show, you just have to create the relationship, easier said than done, know your market, right? And then obviously you found Cody, which is great too, because he had that in. But I mean, it's kind of proof out there that it's possible, and you can do it in a time now in an inflationary period where people think there are no deals. So yeah, I'm just pointing all that out, right?
Well, and you want to take it another level on keeping it simple and building relationships. Break it down this way. Who knows how to buy all the properties in your market? The people who currently own those properties. So if instead of going after transactions, which everyone is doing right now with social media, mass marketing is the thing and crowdfunding is the thing. If instead of doing that, you call someone and you go, hey, I have the duplex down the street from you. I saw your 12plex and I realized I can't just stack duplexes to get to my goal. I wanted to know how you bought that. They might respond with, well, I'm not selling it because they've been beat up by every caller in the market. It's like, awesome. I don't have any money. I don't even know how I'd buy it. I love what you've done and I don't know how to do it yet. Can I get you coffee? That is how you build a relationship. When you learn how they bought the property and they know what your goals are, they start to buy into you and they help you with the next step. That could be introducing you to someone else. It could be, if they wanted to sell the property, they'll write you a different contract they'd write anyone else because they understand what you're doing in your position. And they'll go, well, you know what would work for you is if I seller finance this, because now you have trust. I seller financed it, we made the payments X. And now you're talking about terms instead of price. They can get their price. Price doesn't really matter because we're going to do longer term debt and it'll be worth something else in the future anyway. But if the terms allow it to cash flow, you answer the question, how do I own it? You meet owners and learn how to own it. How do I keep it? You cash flow it. In down market, you get paid to wait. In an up market, you make a whole bunch of money. It's that simple. We don't complicate it past that.
I have a way to equate this to a bigger scenario. So like me about 5 years ago, I bought a car, and I was just thinking about this from a consumer standpoint in purchasing something. And I went into the dealership and I was like, well, I don't want to pay $15,000 for this car. I don't want my pay. They're like, what do you want your payments to be? They said, what do you want your payments to be? Right. And me being 25, I'm like, well, if I could pay $250 a month, that'd be great. So they just worked it out. And they're like, instead of having, 48 months or 60 months, they're like, we'll just bump this to 72 months. The interest rate is whatever it is. They even probably made it higher for me. Just so me as this consumer, this dumb consumer, right, was just happy that I got to pay $250 a month. Now, that's not the exact same thing, but the point is that you're asking what does the person want on the other side, really figuring that out, and then kind of going retroactively backwards to get to that number. And that's what this dealership did to me. So, yeah.
Yeah. So, I was going to ask you, how did you do the research, or where did you find the strategies to put these deals together? Right. Because it isn't something easy. I feel like that you can just read in books. It's like, it's all the art of negotiation and then like creative financing in itself, right? Some people don't even understand how a seller financing deal works. I'm curious of, maybe I guess you could break it down on this $2 million deal. Did you guys, I guess, start here and just, we'll talk about the deal itself, but then if you could go into strategies and like maybe advice you have for people looking to like come up with creative financing or like strategies to buy into deals. But this $2 million deal, how much did you guys have to put down in order to purchase it? I'm curious about that.
Well, I had to put $0 down, but the down payment for the deal was $300,000. It was 15% down on a $2 million deal. We raised that down payment.
Got it. So how did you go about that?
So this is another thing that we do a little differently. Syndication is a tool. So I realize I've knocked it a couple of times on this podcast. I'm going to do it one more time. But a lot of people who are marketing deals, they raise the funds first. They put together a fund and they go knock out stuff. The problem with having a fund with specific rules and specific returns is that you can't tailor that to the situation. We have an equation that is simple to follow. It's deal equals debt plus equity. Like, you have your deal first, then you can figure out the debt and equity. Deal always comes first. So in this case, we had an opportunity. We had a $2 million building with a clear plan to make it worth $3.5 million. Now, we way surpassed our rental estimate, so it's gonna be worth a lot more than that. However, that's what we had day one. Is we were like, look, we have $1.5 million in upside, a bit of a journey to get there, but we have a stellar deal and we now have a structure. It took us 4 phone calls to other investors and friends, just picking up the phone and looking through the phone list. Hey, I need $100,000 from 3 people. One person said no because they wanted to control the deal and they didn't want to invest with other people. Totally fine. Wasn't going to give up control on this. The next 3 people we called were like, okay, well, for most of them, they had small units. So like, this massively increases my unit count. I'm part of a big deal. I want to invest with you guys. I understand what you're doing on the property. And we just got a yes. Once you have an opportunity, raising capital is easy. All we had to do was figure out, how do we structure it on a deal that has very little day one cash flow? In this case, we just gave them equity, because when you have other owners on the deal, there's no cash flow, there's nothing to distribute. And as cash flow increases, you distribute it.
Well, that's the question there. Like for the partners that you brought, let's say it sounds like they each gave you $100,000, right? To get to that number, the 3 guys. What was their structure like? Did they since you mentioned that there wasn't cash flow, how did you structure their return? I'm curious. Or you mentioned you gave them equity, but how did that work?
Yeah. Well, we did this wrong. If I knew what I knew today, I wouldn't have given equity. That being said, I gave them equity because that's how I knew to raise without hitting my cash flow.
Got it.
They all got 20% equity in the deal with a buyout. Within 5 years, we can pay them out 2-to-1. So they paid in $100,000 in 5 years. I can pay them $200,000 to buy them out.
Okay.
Any cash flow that's generated within that time would have been split evenly between them. However, what we ended up doing was we rapidly increased the value of the property. I went to a bank to take out a little bit more money against the property. All of them did not want to be guarantors there. So what they did is they financed their equity to Cody and I. We got enough cash flow to convert their equity into debt. So instead of paying them $200,000 in cash, we went, hey, we can pay you $200,000 in 5 years, or we can bump the value of your note to say $150 today and pay you 8% on that note. And the cash flow from the property buys that. So what we did is we seller financed the property from the owner, increased the revenue, and essentially seller financed the equity from our partners back to ourselves.
My thing is like, how does maybe I'm just like naive. How do you even think to do that? Like I don't know. Like it's such a creative way to make something work. Is it something that you have because you didn't have a lot of experience at this point. Like who gave you that idea to do this? Was it Cody? Like how did that even come to be? Because to me, it's like sounds complicated, but when you break it
actually sounds like rocket science to someone that's never done it.
Yeah,
truly.
It does.
But it's not, but I feel like once you go through it and you've seen this so many times, it's not, right? So like what resources are how do you come up with things like this? And how do you put these together?
So the whole time while we're doing this transaction, I'm still meeting with other owners. And there's some other guys in town who own about 500 units with no debt. And they plopped us in their truck and they drove us around the whole town. They said how they bought stuff. So I learned all sorts of strategies they use because they started with no money, how they bought low to no money down deals. And there's another guy in town another guy immigrated to the country with no money, learned English, but traded his Honda as the down payment for his first house.
Right. I
learned all these strategies from the people who've actually bought the neighboring real estate. And while we're learning this, it becomes second nature. It's because I get it sounds a little bit complicated and on the podcast to make it really simple. Like equity is the ownership and debt it has monthly payments paying off a certain amount, right? All we did is 2 times. The owner has all the equity in the property. They financed the property to us. We brought on new owners to help us take down the down payment and they financed their ownership to us. It's just like a car payment. It's exactly like your example. The crazy thing is everyone feels like, oh my gosh, this is ridiculous. And at the end of the day, I'm like, we did a very, very simple structure 2 times.
That was a good breakdown.
No, that's perfect. And that's like, I'm already thinking like that. When people listen to this episode, just keep listening to that part. Cause that really breaks it down the way that I can understand it. So thanks. Appreciate that.
So, okay. So you have this deal, this $2 million deal. And I'm curious on how you guys, and forgive me if you've already explained this and I'm just trying to like recap myself, but how do you said they pay 20% down in equity and then you can buy them out at a certain period of time. Do you pay them cash flow at all? Like a yearly or monthly, or how's that work?
We would have on that deal. However, we bought them out before we were even cash flowing the property. We raised the rents, but all that was going into renovation. So there was no additional cash flow to move forward. We bought people out very, very early. We were able to, and we didn't bank on that. We didn't write it like we're going to get the rents up 4x in 6 months. I mean, that's just ridiculous. We were operationally really, really effective. That being said, if we didn't buy them out, everyone's 20%. There's 5 owners. They would have had their 20% of cash flow just shared evenly.
Annually, or is that monthly?
We do everything monthly on distribution.
Monthly. Cool. Okay, cool. I think people are going to be curious about this too. Before we go on to the next thing, I'll let you go. How do you know what needs to be done in the property to be able to increase the rents, right? You guys were like, it seems like you forced some equity appreciation into this thing. And it's like, it's interesting because it's a big deal. We're talking, most of the people we talk to have done like single families, duplexes, but when you get to a 38 unit, I'm thinking like, what do you do specifically to these units? You mentioned a potential like homeless camp on it. Can you just give us like the ins and outs of this whole deal and how you got it up to like brand spanking new, or to where you're making, what'd you say, like 20 grand a month cash flow?
Yeah. Well, the 20 million gross income on the property is
Gross income.
Keeping it as simple as humanly possible. There are no rents in that town online for less than $1,000 a door. Now I have smaller units than a lot of the rentals out there right now, but there's nowhere to rent under $1,000. Rents day one, we're averaging about $380. They hadn't been raised since the 90s.
I guess that's what happened when somebody owns a property and free and clear. That's just like, well, I'm making X amount, or maybe obviously they didn't know how to manage it correctly, but like if they're making money on it for a certain period of time, they just get lazy with it. But go ahead. I'll let you continue there.
The other thing that they had is that like 15 of the units were non-pays. 5 of them were vacant. So no payments there, obviously. But there's 10 people just not paying. What we did is just basic stuff. You come in and repair everything. So right as we came in, we asked who needs what appliances. And most people didn't even bother responding because they're used to owners not caring. But for those who said, I need a new fridge or a new stove, we brought them all in on the same day. We had the contractors line them all out so everyone can see them. And we knocked on the doors and brought them into units. And people started seeing, hey, we're putting energy in this project. We care. Stove going here, toilet getting fixed here, light fixtures getting fixed here. Little stuff, not that expensive. But people saw that we cared. And all of a sudden, another wave of requests came in and we solved all those. And we started renovating units. And to date, there's 4 buildings on this campus. We just last month painted the first one. So now interiors were getting nicer. Now all of a sudden there's new paint and it looks better from the road. Every month we're going to be painting another building. So as you put energy in, it fixes the non-pay stuff. People are okay with paying for a great living situation. As we bought it, 3 days after we closed, septic backed up and poo started coming through like 4 of the showers. Oof. If you live in an apartment where poo comes through your shower, you're not super likely to pay. So that's all we did is fix the poo, paint things, and actually address the issues that the community is having. And with that, it's gotten a lot better. It's not brand spanking new, but it went from class F to class C+.
So it was just mismanaged, like the main thing, and it needed some updating. Nothing crazy though. It's not like you're putting stainless steel in everything. You're painting everything a specific accent, granite countertops. It's like you're just upgrading slightly, and people are willing to pay, and then you're able to.
Yeah, and we did do stainless steel and granite countertops in a few of the units, but you're talking like 5 out of 38.
Okay, cool. Just to test it out, right? Just to see who would pay what. Is that kind of how you do it?
To be honest, that's the part of being newer. I was used to doing duplexes. I overpaid for those. It didn't really help the rents that much. I could have paid less and people liked it just as much. That's a learning lesson. But at the end of the day, it was a big enough deal where it's like, okay, the deal made $1 million instead of $1.1 million. It's like, no, okay, lesson learned.
What's that bad boy worth today?
It's worth about 3.2.
It's awesome. Good for you. It's amazing.
So then the question that I would have in terms of scaling, did you use the equity that you had in that 38 unit to pull, when you refinance, did you pull money out and then go buy more property with that? Or did you stay on the creative funding and raising money for each individual asset that you went to buy after that?
That is where I think a lot of people get lazy, is they go, I have some equity, so I'm going to get out of the creative space and I'm going to start just buying stuff. There's nothing wrong with using money on real estate. Don't get me wrong. But everything that we have purchased, except for my first duplex, has been seller financed. Every single property. They've all been zero down. And that is how we've always operated. I've never done the down payments. My most expensive expense to buy a property was just paying earnest money, which is usually like $5,000 plus closing costs. So like I recently spent $6,000 to purchase a duplex with a large land parcel that we're going to start developing on. But yeah, we never stopped. I've never pulled money out of a property. I've also never paid myself once from this. I reinvest all of the cash flow back into the properties. When I need money, I can always flip that switch and pull some cash flow, but every cent gets reinvested back into the buildings.
So that being said, are you still working full time while you're doing this?
No, that would be crazy to go this fast and still try to hold a job.
Well, so if that's the case, then, and you're not paying like, how are you paying yourself? Are you paying yourself I get a small paycheck. We started a property management company to manage all the units, and I get a small paycheck from that. And Cody and I started a consulting business, the multifamilystrategy.com, where we show other people how to buy low and no money down. Super inexpensive. It's $300 a month, but we just built a community, and that revenue helps. Granted, most of that also goes back to the properties, but it's enough to pay the rent and pay food. And I just don't live lavishly. I have an inexpensive car. I live in a nice neighborhood, but it's a 1,300 square foot house. Man, I live in a little box. This is all I do is real estate. The money is to build more real estate.
Very cool. I think it's just interesting to see how you scaled up. So you've never, this is probably motivating for people that think they have to continue to save up money, put money down, save up money, put money down for property. So can you just walk us through seller finance? I know you kind of touched on it before, but like how you're finding these seller financing deals, because, some people aren't, they just want to be paid out completely, right? Like go to the bank, have it fund completely financed, and they get a check. They don't want to be the bank essentially, right? So how are you finding motivated sellers that are willing to do seller financing to you, and are you using like a specific thing like Deal Machine where you're sending out mailers? And I'm just curious to like how your ship runs.
I love this. No one believes what we do because it's so darn simple. Google Maps, only place I prospect ever. Because turns out every property I ever bought is on Google Maps.
That's good.
We come in and Google search. I put a video on our YouTube channel, Cody and Christian Multifamily Strategy. I put a video, it's like 8 minutes on exactly how we do this.
Great.
But
we'll take a
in
look.
A market,
and I'll link that for people too.
I appreciate that. Yeah. Link below. Cody and Christian Multifamily Strategy. It's called How to Find Every Multifamily Owner, I believe. But essentially what you do is you choose your market, because location is like the only thing. Choose where you're going to invest, and then know all the properties there. So I bought a duplex in Moses Lake, Washington. I then drove the streets on Google Maps, and every time I found a multifamily building, I put that address into the tax assessor. That tells you who owns it, which is usually an LLC. If it's an individual, jackpot, Google their name and call them. If it's an LLC, there's all sorts of free sites like Open Corporates, True People Search. If you just Google that LLC and drop it into one of those searches, it will show you who owns it. Take their name and plug it back into Google. So basically the whole game, find an address, put in Google, and then you just keep taking the new information and Googling it until you find a phone number. Then you call the phone number. If you are trying to mass market, this is wildly inefficient because it's going to take you a whole 5 minutes to find something. If you're intentionally calling all the neighboring properties and you have 10 people to call and you just want to take them to coffee, in an hour, you know everyone you need to call. You have their actual number and you just book a meeting. Now, the one other key is you don't talk about a transaction. I get called all day, every day. Hey, do you want to sell your click? Would you consider an offer on your note? But I go, hey, I'm your neighbor. Just bought a duplex down the street. Oh, that's awesome. What's going on? Is there something wrong with my property? No, actually, your property is awesome. That's why I'm calling. I'm not selling my property. Don't know how to buy it. That's fine. I love what you've done here. I want to make the neighborhood nicer. This is what I'm doing, investing in your neighborhood. And I just was wondering if you can get coffee. I'm in town on Wednesday. It's that simple. Get a little back and forth and meet with them. And that's all we do. I don't talk transaction. I just talk who I am, what I'm doing, why I'm doing it. Relatability, goal, significance. In that conversation, that's all I'm trying to figure out with them. I don't care if they're selling, if they're whatever. Who are they? Where do we relate? What is their goal? And why is that goal significant to them? If I know that, I have a relationship. And now every interaction from there, even if it's about a deal, the conversation starts, hey, based on our last conversation, I had an idea. We need to meet again. That is so much different than, hey, my computer told me that you own a bunch of properties and I want to buy them. Like, it just lands completely differently. And that's all we do. Google Maps.
I think That's maybe some of the best advice we've heard in your 115th episode. And the reason why I say that is because I get calls all the time too. Like, and they're always, or texts, and they're like, are you interested in selling? And I'm not really interested in talking to a robot. So I do the same thing that you do. But what you've done is you've created a system for yourself, and it seems like it's a genuine one, where if that person needs something, you're on the lookout, you're thinking about them. And obviously you're trying to better yourself in your own situation too, but you may end up benefiting from that 2, 3, 4 years down the line if you continue to build that relationship. And that person's not thinking about Christian getting one over on me 4 years down the line. If you've actually created a true friendship or partnership, or maybe you've take notice to things that they enjoy, even on a personal level, like it's all about that relationship and getting that thing started. And then who knows when it could come back around to you, and it may never, but that person may introduce you to somebody else. And in which case that may help you, the next person you meet. So, I mean, I really like that approach. It's the long game though, right? I mean, it's not, if you're trying to wholesale or come up with transactions, it takes a lot longer to do it, but you're talking about a system that just truly works, and people are going to think about you when they think about real estate. And I think that's powerful.
And by long game, I spent about $100,000 of my own to buy $1 million of real estate, or $11 million of real estate in 18 months.
That's not very long.
By long game, it's not like super long.
Right. So I like the strategy. I'm going to play devil's advocate here a bit and just ask you, this seems great for someone that's investing in their local market, right? Like building the relationships with their neighbors, and like you bought the duplex down the street. Does this strategy work for people investing out of state as well? Like maybe it's not as easy for them to grab a coffee. So I'm curious on what you would recommend for them, or someone that's, interested in not their backyard, right? It's just, it's further away.
Well, for me, my whole portfolio is 200 miles away. So it's a 3-hour drive over the mountains, often through a lot of snow, for me to see any of my properties. So for me, it depends on where you want to invest. They're in our mentorship group on the multifamilystrategy.com. We have 2 19-year-olds out of California who are like, dude, there's no way I'm going to do this in San Diego. And granted, you totally can do it in San Diego, but it is hard. They settled on Texas. They're under contract for their first 10-plex right now. They're going to buy it zero down. They've been at it for 6 months. So, I mean, they grinded to get there, but ultimately it's off market. They're like, hey, I found a deal that's worth flying for this relationship because this person knows how to buy in this market. Got on a plane, they got out there, and they built the relationship.
So it's funny that you say that. I don't mean to mitigate 6 months, but it's funny when you hear when you say they grinded for 6 months. Like, the alternative to doing something like this is working 45 years in a job that you may or may not like. So grinding for 6 months, like, is that worth it to you? Like, for us, I think, we only have 7 units. We're small time investors, but I think about the time and effort that I went in to do that. And now I think about, okay, how do I actually scale this? And if we wanted to, which we have a lot of different goals, and I don't know if one of them includes owning like a 50 unit complex or not, but if we took 6 months and either joined a mastermind, if you will, or a course like yours, like you just said 2 19-year-olds did this. So somebody driving in your car to a job that you may or may not like, a 40 unit complex that Christian took down could set you financially free. I mean, it really could if you keep your expenses low. So I just think that the power of real estate, I mean, we talk about it every day on the podcast, but it's just really, it's amazing. And you can't meet, today in 2022, you can meet people online. Like, well, look at us talking, you're all halfway across the country, all the way across the country from us. So it's just really cool. I mean, it's really, go ahead, Brad.
Let's talk about one of the transition, like the conversations, right? So I'm thinking about, you called these owners, right? Where your Google strategy here, right? Yeah. Then you finally get to the coffee, right? And you're sitting down. How do you transition that conversation to working it into a real estate transaction, right? I know you don't talk transaction up front, but you've built a relationship, right? Or you're asking certain questions. I'm wondering if you could kind of walk us through that conversation, and then kind of that pivot to, okay, let's strike a deal together, and kind of how that flow works.
Yeah. So you're going to talk a little bit. So first of all, you always go into every single meeting with a clear objective. And in your first meeting, I am going to map what we call the circle drill. That's the relatability, goal, and significance of this other person. And I'm going to communicate mine in 5 sentences or less. So I'll communicate like, hey, this is who I am. This is what I'm trying to do. And this is really the reason behind it. Like, for me, starting out, it was retiring my wife, which I finally did this year. By finally, I've been at it.
Amazing. Congrats.
Thank you. I'll come in, I'll communicate like, hey, my wife's been in the school district. It's fallen apart during COVID. We've been trying to retire her. I was in duplexes and I needed to learn how to scale up because it was not happening fast enough as our school districts here declined. It's like, we got to get her out of the system. And I didn't have enough money to do that. That is why I'm doing this. Now, in a few sentences, I've told a story of, hey, I'm trying to acquire, I'm scaling my portfolio. I'm looking for bigger buildings. My reasoning is my wife, who's in a school district. Everyone out there is also frustrated with the school districts, but it's like, it's relatable. There's significance. And I've communicated everything I need to do in a few sentences. So we're rolling. I asked them about how they got started. And that's always where I start because the start's a great place to start. You build momentum here. And to your question, the pivot is once they tell you how they got started and what they've built, they'll usually talk for 15, 20 minutes. What do you recommend I do next? That is the pivot without being transactional. They already know what you're trying to do. So they're now on your side trying to help you. They've shared what they've done. And that's where if there is a property that they want to sell you, it will come up there. If they have a friend who has a property that's a good fit for you, they'll suggest it there. But that's not like, hey, would you ever consider selling this? It doesn't matter. I've just learned how someone in my market bought real estate. That's the most qualified person to teach me how to do this. I have new takeaways. And the pivot is just take all the information. How do you recommend I do this? Then go apply their information because the application is more important than information anyways.
I found this to be true in a bunch of people that we've interviewed, especially the seasoned investors who have been doing this for a long time. And no offense to you, but you haven't, right? Even though you've scaled as long as you haven't been doing this for a long time. But the people that have been doing this for a long time actually really want to help new investors. And I don't know if it's like that in every industry. It seems like the real estate investing world is that this person who has no debt on their property, unless they're just an asshole, which a lot of these people are not, they're trying to give back and start the new generation of investors. Like by you asking them for help actually is giving them like, you know what, I'm going to teach them something about something that I know. It's like, it's a wild, experience.
I have a weird thought on that. It's so interesting. Like in your 9-to-5 right of the corporate world, it's like a dog eat dog world and you're fighting for the next promotion. And then think about how quickly or it's semi-quickly real estate can transform lives and just the amount of money and cash flow and like freedom it can provide people. Once people get there, they're like, holy shit, my life is completely changed. And they're kind of good. They realize they're way ahead of that where they would have been if they had kept grinding that 9-to-5. And then they're like, now I'm learning what I've learned. It's proof that it's worked. It's like, it's a case study, a testimonial. Now I can go change other people's lives. And that makes them feel good, right? Because you're then changing the world with something you knew when you didn't really have the power to do so in your 9-to-5. So it's just a weird concept to feel because I truly feel that with our, you and I are still working. You're just like, you can change someone's life by 10 to 20 grand by a promotion, but you're not giving them financial freedom to do what they want when they want.
It's a great point. Even if you get a raise, and you're 30, right, Christian? So you worked in the working world. Like when you get a raise, a 5, a 10 grand raise, and then you look at your paycheck and you're like, well, I just made an extra $250 like per paycheck. And you're like, that doesn't change my life at all. Now, don't get me wrong. There's benefits to having a 9-to-5. Like I'm not knocking that at all because it's helped us get loans. It's like, it's helping us build and stability and all that to move on to the next thing. But once you hit that level that you're at, that real true financial freedom level, the changing of the lives, it's like, it's incredible. And I guess back to what we were talking about, it's just that's what you've done with people who have debt free, they're debt free. Clearly they're like, well, it doesn't matter to me if I'm making $25,000 a month on this property, or if I'm making $17,000 a month, but for you, it does in order to get to acquire your next asset. So it's a cool game.
It's the natural progression. When you reach your financial goals and then you've done it a few times, like you set a goal and then you've blown it out of the water and you set a goal and blown it out. Like, they have more money than they have time for the most part. Once money's out of the equation, you're like, I don't have to work for money. And this is new for me. Like I'm recently there. You look around and you're like, it's kind of lonely. I'd love to have some other people make this. There's not a ton of 30-year-olds in the same spot. Like you want to move people forward because you're like, hey, I did something cool. I want you here with me. Like I'm making up a statistic, which is always dangerous, but I feel like it's like 90% of owners, like once they make it to whatever that means to them, they want to help. Cody and I just flew down to Missouri to look at an owner's portfolio for him to give him some feedback, and he was willing to seller finance it. We're not moving forward on that, but we looked through the whole portfolio. Guy lives in Dallas, owns 2,000 units, more land. He owns more land than he does multifamily, but I mean, like hundreds of millions of dollars of properties. And he took time out of his day to be like, hey, fly down to Texas, say hello. I'm going to teach you something new. And I had some great takeaways. But like, why would someone like that meet with you? Because you share a story and they're interested in your story. And that's about it. They do generally want to move you forward.
Yeah, absolutely. And like we ask why do masterminds exist? Well, I mean, there is an aspect of it that like, you know, people are paying to be in it. That's understandable. It is a revenue generating thing. But like when you meet somebody whose net worth is 10x yours, and then they know somebody whose net worth is 10x theirs, there is an element of like, well, how do I bring more people to my level? Because it is kind of lonely at the top. And like Brian and I were talking about this the other day, as we were talking about the next 5 years for us in the progression. And like, maybe we are leaving our jobs. Maybe we're financially free. It's like, well, we only have each other to hang out with on a Tuesday. It's like, not like everyone's going to be like just off their job. Right. And I'm not suggesting that we're just going to like do that. But the point is like, to bring other people along with you, that is part of the game.
Yeah, I was thinking about this the other day. I talked about this in a previous episode, but I had a week off of work, and everybody else, it was just like a random week because like the way our cycle works, and it was like it's not a traditional 9 to 5 where everybody's consistent throughout the year, right? And I was looking around like, what the hell do I do today, dude? Like no one's around, and I'm thinking if someone's completely financially free, maybe they don't have a family to take care of at that point, but I'm like, not sure what I should do today. Should I research? Should I do some more? And then I'm like, if I didn't have the podcast, I didn't have our other investor friends to talk to, I'd be like the most bored guy in the world. So it's one of those things to your point. You're like looking around, you're like, well, I got the donut, I got the freedom. It's like, maybe I should help some people. Like, you know what I mean? Like, and elevate others to your level. And I think that's where a lot of people in the real estate investing game that become successful, you know, just to put a bow on it, like they're now giving back. And we found that literally 90% of the people we've talked to have offered the olive branch and been like, hey, how can I help? And it's been amazing for us. And that's why we tell people just get out there. Real estate is a people game. As much as it is numbers, it is relationships. Look at all your deals. They're all seller financing. And that doesn't come without a little bit of sales, but a lot of people and network and relationships. And kudos to you, man. Like your portfolio in a year and a half to go, you're about to be at 90 units. It's amazing. I think we're going to transition a little bit and talk about systems and kind of like how you organize your business. But I don't want to skip over this part. Just like that last little bit of transition, you got to, I think it was you have the 38, you had a couple duplexes, then you had the 38 unit. Can you just take us through the last couple of deals and just to where you're at today? And then we'll move into like systems and how you run your ship.
Yeah, there's been a bunch. There's been, our next deal was 3 side-by-side duplexes, also 0 down. A 7-plex in Seattle. In fact, the only asset I own in Seattle.
Cool.
Then I bought into one of Cody's existing 12 plexes. So that was, took money from one thing and rolled into that one. Bought another 6-plex. The most recent ones coming up. I don't know why 6s just seem to be coming up everywhere. I got 2 because the next one was 2 triplexes, but under contract for 6 units with a large piece of land. We'll be closing out here very soon. We'll be closing that, I want to say middle to end of the month. Driving out there on Wednesday to look at it one more time. That one came together, and then actually 3 days ago, got a call from a broker looking at my last few closings and went, hey, you still buying in Moses Lake? To which I responded, always. And he calls like, hey, I have a seller financeable deal. And that's the first time it's ever come to me. But that we went under contract for this morning. And that is 10 units on a road that I've been trying to be on forever. It's the last major road in town I don't own on. So we're looking at a 10-plex out there and went under contract several hours ago.
Yeah. So before we move into this, and I'm glad you brought this up because you talk cavalierly about it, but the reason why you do that is because it seems as though once you get to that 10, 20, 30 unit mark, like, I don't mean to mitigate it, but the game does get easier for you because of how much you've learned, right? And like you just said, a deal came to you. A deal's not coming to you if you have one or two properties, or you're not networking and in the game all the time, right? I mean, have you found that?
Yeah, that's the first time that someone has gone out of their way. I mean, there's been brokers who want to work with us, but they're calling saying like, hey, we see your momentum. We want to be part of we want to ride the wave, right? This is the first time someone came to me with a good deal in hand off market when, hey, I've been talking to the seller. I'm looking for a buyer. I'm like, oh, awesome. So apparently a year and a half and like 79 units is the magic number where they're going to start bringing deals to you. At least that was the case for me. But yeah, as you have progression, momentum matters. Absolutely.
Yep.
Totally. So this kind of helps us transition into this, but I'm thinking about like, now that you don't have your 9 to 5, right? What are you guys doing every day? Like, you have all this time and I know you don't have a ton of time, right? Because your business is structured, but I'm curious, like how you and Cody kind of run your ship. Like what's your day-to-day look like? And then if you maybe, we could talk about your partnership too, and like who handles what role.
Yeah. And I'll go a little bit quickly as I'll have the roll into my next meeting here in a few minutes. But easiest illustration for this is imagine a boat. Cody does a majority of the deal finding, relationship making. Now I still do a significant amount of that, but say Cody does 80% of those. As he's bringing in fish, I am building a bigger boat. And when there's too many fish for the boat, Cody will help me build the boat. And when everything's sailing smoothly, I'll go out and help Cody fish. And that is the easiest illustration I can have for our roles. Is Cody is the most relational and he's an incredible salesperson. I know how to do sales. I enjoy the relationships, but I do a lot of systems. So the accounting, our education platform, Cody and I both work evenly on our property management company, but running the companies and the HR and accounting and all that typically will fall on me. And that is how we do our systems. The most important piece of them is I do those after we have the first problem of enough income. Because if you focus on the accounting and the HR and the branding before you own your duplex, what's it all for? But when you buy 50 units and you're like, oh gosh, I don't know how to do anything else. Now you have a problem worth solving. And so that's how we do everything. It's ready. It's kind of ready, shoot, aim. It is how we usually operate.
We made it to the second to last segment of the show. It's the core 4. We ask the same 4 questions to all of our guests just to get to know you a little bit and, kind of peel back a couple layers on you as a person. So we'll hit you with an easy one first, but we'll go rapid fire because I know you're pressed for time. So first one is, what's your favorite investing or business book and why?
Favorite book is Brandon Turner's The Book on Rental Property Investing, because it's the book that got me started. It made me realize this is way more simple than I think, which is phenomenal. It's not the most detailed. It is the one that got me started. I recommend it to literally everyone looking to get into real estate.
Yeah, we both read it. It's a great book. Question 2. So let's say somebody, let's say somebody handed you 50 grand today. We realize it's a different amount of money for different people. We may up the dollar amount here, but like $50,000, no tax. At knowing what you know now, what would you do with it like today?
$50,000, I would invest that into real estate immediately. We have stated inflation of like 8.5%. Turns out that $50,000 is a new roof on a building and a way to increase rents. Or, if I wanted to get lazy, that's a down payment. But if I have money in, it is in real estate immediately.
Got it. Cool. So number 3, what's been your biggest mistake that you've made in your investing journey so far, and how have you learned from it?
I work on the relationship side, and that circle works for your investors too. Exact same thing. I had one investor who stated, I want more units and I want more cash flow. And I figured, okay, well, that's what everyone wants. This is going to be perfect. I put them in my highest unit, best deal I've ever done in my life. They're the only ones who ever asked to pull capital, and we did cash them out. He wanted to be more active in the real estate. He wanted to feel like part of the team, and I didn't identify that. And that is why it's so critical to learn the relatable points, the goal, and the reason why, because his goal had nothing to do with his reason why he was investing. We didn't identify that, and missing that was a 6-figure problem where we had to figure out $100,000 in 3 days. Super not fun. I called through my phone list and we solved that on the letter V. So
damn, you made
not
it.
fun. Glad that I had enough contacts in my phone book, but I almost did. So that was big lesson learned. Know your investors.
Love it. That's a good mistake to learn from. Okay, so question number 4. What do you want your legacy to be, Christian? Like, what, we mentioned this a lot. Doing what you do is not easy. To build the portfolio that you have in 18 months is remarkable. It takes a lot of work. What's the point of it all for you? Why do you get up and do what you do every day?
It started getting out of the 9 to 5 and retiring my wife. And I still want to move to Texas. I'm done with rain and grayness and all that is Washington. But I'm going to hit that goal within the next few months. Like I have the option to do that. I'm just tying some loose ends here. What has evolved to is we have used creative financing. I mean, even some stuff outside of just seller financing. We've used other aspects of creative financing to go incredibly fast. Right now, we're the 3rd largest owner in Grant County. I want to be the largest owner in Grant County, and we'll get there in the next 2 years. The reason is I want to show everyone how possible this is. We talked about trying to bring people up. I'm like, let's just do something so big and so ridiculous that it's absolutely never been done before. And let's have a 22-year-old and a 30-year-old with no experience and no money take out an entire county and tell the world how to do it. And so that is what we're working on now with the YouTube and the course, and the me being here is I just want to broadcast to people, like, no matter who you are, where you are, you can build relationships with other people that move them forward and move yourself forward. And that is how you advance as an entrepreneur, not just a person.
And society. Damn. That was really good, dude. Thanks. All right, cool. Well, we made it to the last segment of the show. And we'll wrap with this, but this is super basic question, but and I know you're a fairly young guy here, but knowing what you know now, if you go back in time to, let's say, like 18, 20-year-old, what advice would you give yourself if you could go back in time and kind of give yourself a little peek behind the curtain?
Commit first, figure the rest out later. I wanted to be in real estate, but the commitment came in 2020. Cody Davis, my business partner, he's 22 years old. He started at 19. He dropped out of college and went, I'm committed to real estate. And he just bought a 12-plex, $0 down. And he's like, wow. He talked to Grant Cardone after he bought his second 12-plex, $0 down. And Grant's like, you can't repeat that. It's not scalable. And he's like, well, I don't like that. So then he bought a 6-plex, 38-plex, another 6-plex, 7-plex, another 6-plex, and kept going from there. Anyone can do this anywhere, but I wish that I committed and just bought something. It could have been a 50 unit, which would have been awesome. Or it could be a duplex. But when you take action and you actually apply the information, you move forward and you have a new set of problems. If I had done that say I made it all the way through college, I would have done that at 22 and I would have 500 units today, not, the 79 today.
Love it, man. This has been a pleasure. And I think you've brought a lot of value to our listeners and a reason for them to join along in your journey and follow it, and maybe join some of the course and the mastermind and the group that you have. So if people are interested, they want to learn more about you or network, what's the best way for people to get in touch with you?
If you want to reach me directly, Instagram is the easiest way, at Christian Osgood. That's the simplest one because it blows up my phone the most. And so I tend to click on it. If you want to learn how I did this for free, the YouTube channel, which you guys are kind enough to link below, is Cody and Christian Multifamily Strategy. If you want to streamline it and just learn how to build your own multifamily strategy and you're committed, check out themultifamilystrategy.com. That's our course. You can go through and design your own creative strategy, low to no money down.
Love it, man.
Amazing.
Thank you so much for coming on. It was a blast getting to know you. We'll let you get to your next task of the day, but it seriously was a pleasure, and you dropped a lot of knowledge on our listeners, so we really appreciate it.
Hey, I really appreciate you guys having me on. We'll talk soon.
Talk soon. Thanks, Christian.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.